Hi and welcome to the Market Alert for Friday, the 11th of June 2021. So core consumer prices surge at fastest rate since 1992. Goods prices are up by 6.5 year on year, the highest since 1982. If you do a quick search for US inflation source to 5%, you will see there is plenty of news about this soaring to 29-year high there from Business Economy website there. So yeah, it's coming. Well, it isn't coming. It's already started. And also this article here: 5 signs that America's raging inflation crisis is accelerating. The pace at which conditions are changing is catching a lot of people off guard. Okay, so we'll have a look at that in the market's reaction to that in just a moment. But the implied volatility down, so that must indicate that the Dow wasn't too concerned. Well, it wasn't initially, but then it changed its opinion and started to decline, which again we'll look at in just a moment. So the implied volatility still down in those lows, which needs to change, but that's not going to change till we get a correction. Today's news, we've got Bailey speaking at 9:30 and then 3 p.m. We've got the preliminary UOM consumer sentiment. So let's have a look at the Dow, and if I can find it. This is the daily chart, so you can see that yesterday obviously the market moved higher and then came back down to the 20-bar moving average. It's up on the overnight, but the market is still stuck in this sideways range because of the news from yesterday. So these will be the upside targets for the market. Any failure, that 89% is the area I would be looking at for this market to start making any sort of correction. If it can't close above the 89% on a move back to the upside, then we're in danger of a correction. Now, the market news, you can see when the news came out. This is European news. Here, the ECB kept rates unchanged, and then the 5% hit the market. They sent prices down to the low, then moved it up to the high, 150 points. Actually, it's a bit more than that, isn't it? We were 100, 200, 300 points up at this point, and then the market came back the same, 300 there. The blue lines are 100 points in between, and then the market tried to recover a bit there, which you can see coming back 150 points, 50% retracement, and then trading back to the lows, and you can see just moving sideways on the overnight market there. Similar picture in the German DAX, but not such the same velocity of move, but you can see they're still sitting sideways and inside range as well for yesterday, which is incredible given the news. So the volatility not as great in the German DAX. These are the upside targets for the DAX, and again, the 89% retracement, should prices move to the upside, is going to be the area that I will be looking at for any longer term correction in this market. In the 15-minute chart, well, actually let's have a look at the 5-minute chart of yesterday. There you can see the initial move to the downside in the morning, not a great lot, and then the market traded sideways, managed to drift up before the European news, but then came back 89% to this low, which we can see there. European news, CPI news, and then the market moving higher, and then as soon as we got back below the 20-bar, moving to the downside there. And you can see this a bit more clearly in the 2-minute. Again, that same pattern there, but here's the news. This is the ECB saying rates are going to remain unchanged. Then we get the CPI figures, and then we get the follow through to the upside. But just like the Dow, you see the DAX moving back down there, but nowhere near the same velocity of move. And overnight, prices sideways. So you can see they're sticking to the DP level there like glue, and just sitting above that at the moment. So let's just bring all of these, compress all the data so we can see where we are again. So sitting at the DP, which has been a theme of this week, the low is about 80 points below, and then the high is about 40 or 50 at the moment. So we'll see what the futures market does at 7 a.m. when it opens. Right, let's have a look at the metals. So starting off with silver, we can see that yesterday the market was slammed to the downside. So let's look at that in a bit more detail. Let's go to the 15-minute chart. You can see prices were slammed below that 27.50 and the previous day's low. Major support area there. The market was immediately brought into the market when it did this, and then the market has traded sideways to higher, and overnight we're actually above the $28 and the previous day's high, and it's looking fairly strongish at the moment, as we can see there in the 5-minute chart. Whether it holds or not, who knows? And of course we're not out of the woods yet, because the inflation may be increasing, but Basel III is still to be implemented on the 28th of June, and all of its implications as well. Some great videos around talking about that. The one I would recommend is Arcadia Economics with Alistair McLeod, that was recorded last night with Chris Marcus. Really interesting on the corruption in the banks and how they don't actually own the gold, just the digital or futures to actually hold the positions. It's quite incredible. And dollar, let's have a look. Not as low as I thought it might have been, but again, we've got to take out the new supports that I'm just going to mark onto the chart here, because we've got this low to this high. Let's just get rid of these, and then let me just draw that on. So there's your downside targets for the dollar index, which I think this contract expires a week today. It could be today, actually. Let's have a think. No, it'll be next week. It's usually around the 16th, so it'll be the 18th next week. So yeah, one more week of this June contract there. So yeah, the dollar needs to break through all of these support areas that we've already had marked upon the chart. You can see how sideways it is. It's being supported at the moment compared to the silver price and gold, which you can see yesterday. Gold also moving sharply to the upside there, and again we still got the current 76 and 89 marked up there. So yeah, it's all getting interesting. Amazing how the stock market is still going up, even though there's an official 5% CPI. But if you were to look at Shadow Stats, John Williams's data, you'll see that we're around 12 to 15% in real terms. That horrible phrase that Gordon Brown used to use when he was Chancellor of the Exchequer during the mid-2000s. So yeah, there you go. That's the state of play for today. Let's see what happens as far as the market's concerned. It's fairly quiet at the moment. Has it got anything that could actually allow it to move to the upside now? That's the question. But if it does, watch for the 89% in the Dow and also in the DAX, as you can see here. Okay, that's it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.